Hello, I'm Hickey from Interest.co.nz and welcome to a special report on home loan affordability, brought to you in association with Roost. Every month, Interest.co.nz puts out the Roost Home Loan Affordability Report. This is where we look at the cost of servicing a mortgage on an average home. And we do it in several different ways and for each region across the country. And we work out what the cost of servicing that mortgage is as a percentage of after-tax pay. So it takes into account movements in interest rates, movements in incomes in those particular areas, and movements in house prices, all up in one number. Now, what we've seen for March is that an increase in the median house price and a cut in the interest rates being offered by banks, particularly floating interest rates, means we've seen a slight improvement nationally in home loan affordability. So the average house or the median house, if you take out an 80% mortgage on that and you've got one median income, it takes you 53.7% of your after-tax pay to service that mortgage. Now that's down from 54% in February and down from well over 80% at the peak of the housing boom in 2008. There's a couple of things going on here. Obviously, interest rates have fallen since 2008, and in many cases, prices have stopped rising. And when you drill down through the various regions in the Roost Home Loan Affordability Reports, 21 out of the 24 areas surveyed show improvements. The areas that were exceptions were Auckland Central, Tauranga, and Kapiti Coast. That's because their prices for houses have risen quite a bit more, and there's quite a bit more activity there than in other parts of the country. Now, Roost mortgage brokers are telling us that some of the banks have loosened their lending criteria in the last couple of months. There are three major banks that use mortgage brokers. They are ASB, Westpac and ANZ. ASB and Westpac seem to be offering home loans of up to 95%. ANZ is sticking with 90%. However, all of the banks are offering discounts on legal fees and establishment fees. Some too are offering short-term discounts through brokers to floating rates and to fixed rates, and that's helping to perk up activity in the markets. And in those more active areas, those ones where people have higher incomes, have received a bit more in after-tax pay after the tax cuts last year, we're talking particularly here about Auckland Central, we're seeing that flow through into higher prices. So, what's the outlook for home loan affordability? Well, obviously, if you've got a couple of incomes and you're living in a provincial area, or maybe on the outskirts of one of the big cities, it is actually affordable to buy a house now. For someone who's relatively young on two incomes, they can afford to buy a house which is in the first quartile, so not the middle priced house, but the quarterly priced house. About 21% of their after-tax income is needed to service an 80% mortgage on that house. But it's still very difficult for someone on a single income, particularly in those big city areas of Auckland Central, Wellington Central. Christchurch, bit of a different case at the moment. There's obviously some issues there around the earthquake. So there we have it, a special home loan affordability report brought to you in association with Roost Mortgage Brokers. I'm Hickey for Interest.co.nz.